Alright folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope you're having a wonderful day. Want to recap on a trade I took live the day I'm filming this video. And I didn't just take it live myself, I took it live in the company of other traders who were trading live money. So I want to just kind of walk through my thought process, let you know what I saw, when I saw it, and how I reacted to it. And it was really quite simplistic. All right, guys, once you understand that interaction or that relationship between volume and price action, it becomes quite efficient, and you just fall into this rhythm of seeing it over and over and over again, and it looks you in the face and says, hey, Mr. and Mrs. Trader, are you prepared to make a decision around your knowledge? Okay, as you can see on my screen, guys, there's nothing here but volume and price action. So I want to kind of walk you through what I saw, the high of the session for light sweet crude oil. This is a 5-minute chart. I typically prefer a 5-minute or a 3-minute. Normally I look at both, believe it or not. So this was the high for the session. I'm just going to mark it off here so that you can see kind of why I'm referencing this area. All right, you can see we pushed higher here. This is early in the morning, 5:30 my time, which is New York time. The market did sell back off. We tried again. We sold back off. And right after the open, so the open's here at 9 o'clock, we surge into this area right here. All right? We surge right back into this supply area that we fell from. Now, I want you to keep something in mind, right? I mean, just so we can see this kind of clearly, we made some kind of lower lows there, right? Like from this fallout to this next kind of level here, we made, we significantly, created an area that was much lower, right? Then we failed again, and then we made one last attempt. But what stood out the most to me was this 905 candle. Why? Look at that really large increase in buying volume, and then failure to overtake that area of supply, right? This is as basic as it gets. If you don't understand supply and demand, if you don't get that component, it's really hard to trade, guys. I'm not trying to be disrespectful. It's just something you have to understand, right? You have to understand that there are these areas in the market that buyers are willing to step in, areas where sellers are willing to step in. As you can see, we were holding this area as support, held it again as support, and then we ultimately broke through it here on the opening bell, right? So the New York session opens at 9:30 a.m. while crude opens at 9 a.m. So we had this push and we basically got stuck. So when I see strong buying volume and then no more buying volume into an area of supply, particularly with the Hawkeye wide bar, I mean, this right here to me was screaming, hey, we got to pay really, really close attention, because if we cannot successfully take out this high in the next few candles, pretty good chance we're going to fall back, all right? I'm not too keen on entering either right in or before the 9 o'clock open or the 9:30 open, so I normally want to see how price reacts. And once that 9:30 open came along and I saw this surge of selling come in, I was fairly confident that we were going to push potentially even the lows of the session. Now, what I was looking at very specifically was this kind of slightly higher low here, right? You can see we got some, this area here was touched just a few times, right? Got a little wide bar right there. We touch it there before this rally. So this is the area I was targeting. In fact, I'll include the video of the trade as it transpired, so you'll be able to see where profit was taken, where exactly I entered the trade, and how I played it basically right into this handle here. If I'm not mistaken, I think it was at 82.95. I was taking profit, or 82.90. I don't recall. But again, I will include the video in the blog post so that you can actually see, where I entered the market, when I entered the market, as I'm explaining why I entered the market, because with this highest buying volume to session, right? That's the highest that we've seen all session. We saw zero follow through. So that's a big red flag to me. So when the market started selling off, as soon as it gained a little bit of momentum, I got very interested. I advanced my stop very quickly. If I was wrong, I would have got knocked out at break even. If I was right, however, there was a chance that we were going to push, and we did. It's not to say that I'm right all the time, like that doesn't happen very often. In fact, I took a little short trade here. I got stopped out earlier in the morning. I took the second one here as I thought we were perhaps making a small interior double top. I covered part of that position, which covered the initial loss. All right, so I was at break even, and I was just merely waiting for that reason to get short again, because I felt like we were going to retest the lows. And if you look here, the market for the balance of the day ended up continuing lower. In fact, I told a handful of traders who were trading live money with me that if we were unsuccessful in regaining this level right here, right, as this was printing, we're probably going to push through these lows and continue lower. And that's in fact what happened. So, when I parted ways with the traders I was trading live with and instructing and coaching, from there to there, the low of the session, over 120 ticks. So, it was very noticeable that there was a lower high here being placed. You can see there was no strong buying present to make me or lead me to believe we were going to go higher, and then we ultimately broke down. I had stepped away from the market at that point. My wife and I, our anniversary is coming up, so I went to go get her an anniversary present. So I left the market, or the office, I should say, early today, which was totally fine. Stopped out, lost a little money, covered part of my short position, recovered the little bit of money I lost, so I was at draw, and this is where I was able to capitalize on that final push all the way through. It did just take the sellers to step in at the U.S. session open. And again, I will include a video of how this played out for me inside the blog post. So I encourage you to, head to the blog post, check it out. You'll see where I entered short as the market finally started to break down. And then you'll see I split the order. I got filled about 10 ticks apart. So I think it was at 80, maybe it was 15 ticks. I think it was at 83.10 and then 82.95 if I'm not mistaken. But you'll be able to see it with clarity in the video itself. So I want to share this with you guys because, guys, if you don't understand this very important relationship between volume and price action, which is so often overlooked because people are caught up in all these other things that dance across their screen, whether it be MACDs or Bollinger Bands or some other software or whatever it might be. As you can see, with just the clarity of nothing on my chart, my ability to read it is much more clear by just interpreting the price alone. Now, I encourage you to have your reference charts, okay? I don't think that that's bad, but I do trade on what I consider a naked chart, right? A chart that has nothing on it but my drawings, or my illustration of the interpretation of what I'm seeing. And I think that that's very helpful. I have helped traders gravitate to that over many, many years, because you'd be surprised. They send you your chart and they're like, oh my God, you can't even comprehend what all these things are. Now, if you have things on your reference chart that are particularly meaningful to your trade plan, totally okay with that. However, I believe that should be on the reference chart, and you should be trading, interpreting the market itself with simply volume and price action. Because believe it or not, over time you will sway away from the reference chart and just start understanding that the relationship between buyers, sellers, and price and volume searches are more important and more valuable than whatever it is you have printing on your screen. So what I'd like to invite you to do is to head below this video. I'm going to put a link there for a training webinar where you'll join me and we'll dive deeper into this concept. From there, we'd like to get these indicators populating on your screen or on your charting platform. They work on TradeStation, NinjaTrader, TradingView, and MetaTrader. In doing that, I think it's a powerful move right, to now start studying this concept. In addition to giving you the indicators, I'm going to give you access to the Hawkeye Volume Mastery Series, which is going to give you a slew of material that you can go over at your own pace that's going to help you to understand this relationship, right? It's going to take a little bit of time, and that's okay. Nothing worthwhile comes easy. But I can tell you this has been a pinnacle change in my approach to trading, and I've been doing this now for 13 years. I've worked with hundreds, probably thousands of traders at this point, on all different levels, whether it's group coaching, personal coaching, whatever it may be. No matter what the situation is, we always gravitate to a naked chart, volume, price action, and understanding of that. If we have a reference chart, there's nothing wrong with that. But the clarity that will come to what you see in the market, when, where, and why, will be unlike anything else. So I encourage you to head below, click that link. If you haven't checked out the blog yet, make sure you do so you can see my trade actually transpire live. And if you have questions, feel free to reach out to us. But the training webinar will be your next step. Us getting these indicators populated for you would be the step after that. And then following that would be access to the Hawkeye Volume Mastery Series, so that we can start building in that thought process and education that you're going to need in order to understand this relationship. So guys, I appreciate you being here today. As always, feel free to reach out. We are here to serve you. God bless, and I will see you in the next video.